Hello traders, welcome to another daily analysis. Today is January 19th. We are just right past 6:30 p.m. Eastern Standard Time. So let's take a look at what happened in market today. Close this. Yesterday the Aussie employment data were a mix. We have more employment number, but we also have a higher employment rate. However, if looking closely, there were more participation, and that could explain the higher employment rate. At least that's what the market anticipated. The market interpreted it. So we actually saw Australian dollar once again surge higher and basically has remained one of the strongest currency. There was no tier 1 data during London and the ECB meeting at the New York session. They kept the interest rate on hold as expected. The press conference was also expected. There's nothing new. Basically, ECB once again firmly stands their position on the easing policy. So basically, they're saying that nothing has changed yet. And the reason is because there was a little bit expectation from investors since that we did have a better CPI data from Eurozone, especially Germany. So the people, especially all these stronger European countries, people will expect that ECB might soften their stance. They might actually give out more possibility of tapering. However, not only that did not happen, we saw Draghi was quite friendly and basically tell the market to be patient. And basically saying that he ignored the high inflation possibility and saying that the reason is because the high oil price. So that does not mean the economy has to recover fully. He also saying that the low interest rate market can hurt the savers, but it can also help small business because the loan and money is cheaper. So it really depends on how central banks wants to view a certain event, right? Because you can always slice the pie in different way. You can say, hey, high inflation is bad, but you can also say, oh, that's because of the oil price. You can say that, hey, low interest rate is bad for the saver, but of course you can also say, hey, it's good for the business. So it's really depend on their tone and their emotional direction. And right now the sentiment from ECB is really they are not intent to reduce any easing. They are going to do in April, but they don't have a clear detail yet. But just look at the bigger picture in a micro perspective, that the euro is really expected to be weakened for quite some time, basically for 2017, unless we have a different perspective from ECB in our future meetings. Interesting thing is that that caused euro to drop significantly initially, but later on only to recover. And it's really the phenomenon is just again, as I keep mentioning, that's really what happened when you trade the risk events. You have to see if there is a surprise, and really the best probability lies down when there is a surprise. So that's where your preparation comes in to see if what's the expectation and if there's a surprise. So the expectation actually has met in ECB conference. So nothing was given that was really new. But the upset really comes in people's, 50% of people maybe expect a more positive comment. That when that didn't come, then you see euro dollar drop. Now, I didn't trade it. I was very tempting to trade it, but I just don't think the catalyst was big enough for me to sell euro. And I do expect euro to recover and wanting to buy it, but it's just against my strategy to buy something that's fundamentally weak. I was really hoping to buy euro yen back, but in these kind of things, it's really sort of gambling for me because I don't have a clear direction or even a clear level of confidence to buy euro. I, of course, leaning to sell it, but the catalyst was not a surprise. It was not really particularly negative. Now, if in comparison, some people might say that, hey, what happened to the Bank of Canada meeting yesterday? Wasn't it exactly the same in terms of content? Well, not really. It's because the last meeting of BOC, there wasn't really talk about the NAFTA deal between North American free trade deal. There weren't really too much talk about that, and there wasn't really a reality yet. I forget which time is the meeting. Was it after Donald Trump or maybe before Donald Trump? But nevertheless, it was very new. Maybe just after he got elected. So there was really not too much talk about that. So the meeting from yesterday's Bank of Canada, yes, they say the interest rate cut is back on the table. This was nothing new because they always say that they have this possibility. But it's the way they say it. They keep emphasizing that, yes, and it's the bigger context. Why is this back on the table? And the bigger context is that they actually had quite good data. They have pretty good employment data last week. I think last week. They have a pretty good employment data. So they're basically saying something that against the fundamental data. That means they're really worried about the economic future. And when Bank of Canada, when the central bank paint this kind of uncertainty on top of the fundamental strength, that's where trouble might come. And that's what the market has reacted to that event. And that's why you see basically Canadian dollar is being largely sold off from yesterday all the way until today. Now, the oil market today, of course, we did have some negative result that helped the selling of Canadian dollar a bit. Oil market, the crude inventory were a mix. We have large build in the crude stocks, but large draw in distilled and large build up in gasoline. So it's really a mixed result, but generally speaking, not a good picture. Sentimentally speaking, Saudi Arabia is really trying to pump up the sentiment that for the oil price to keep going up. So it's a mixed result that in a general direction is still going up, but as mentioned, expect volatility in the oil market. So that's pretty much the two main events. And the equity market was largely down from the European and American stocks. So really the bigger picture right now, what happened is this. I think traders want to buy US dollar. Traders want to buy buy stocks in general. Right? The financial market is looking quite well, fundamentally speaking, in both Europe and US. But this political unstableness from tomorrow's inauguration to the newly elected president that he's about to take office, officially tomorrow, and next week we are going to see something new happen every day for US. And the political unstableness for Brexit with Europe, the political unstableness of France, Holland, and German election. So this is really largely what caused a sort of hesitation for investors to invest. And that's why you might see this kind of up and down movement nowadays. It really depends on what's about to happen tomorrow, politically speaking. So what can we do, or how do we trade is really, you still go with the sentiment and try to in line with your fundamental and use that technical trigger to find a good entry. So what I'm trying to say is that there's not much you can do in terms of this uncertainty, right? You do have to deal with it, knowing that trading uncertainty is a huge part of the trading. And if you want to be a trader, uncertainty will be part of the game for a very, very long time for your trading career, basically. So it's better to embrace it than to avoid it. I understand you really cannot control about the uncertainty. So that's just the nature of the market. And a general stance, I am still, of course, bullish for US dollar, but not going to do any dollar trade for now, because of the big events that's coming up tomorrow. I'm still negative, bearish in euro, still bearish in British pound, and still quite neutral to bearish in Canadian dollar, because it's really depending on what happened to the trade deal. The certainty for bullish currency is still Australian dollar and New Zealand dollar. Now we will have Chinese data later on, and that's going to affect the market. We will also have Janet Yellen speaks at 8 p.m. today. So these two events is going to shake the market a little bit. We just don't know how far the effect is going to be. If the Chinese data is negative, of course, that's going to paint a very bearish picture for the global market. That's going to make everything tumble except Japanese yen and Swiss franc. On the other hand, if we have a positive Chinese data, that's always going to help Australian dollar and New Zealand dollar further. Janet Yellen her speech yesterday has boosted US dollar. So we are expecting the same thing today, unless she contradicts herself right away, which is really highly unlikely. So we are looking forward to see some positive sentiment in US dollar later on. Of course, we never know. That's why protect yourself. And I'll talk about my daily trade right now, but about how I'm gonna deal with the following events. Fundamentally speaking, tomorrow we have the retail sale from British pound. I have the minimum number, maximum number here, and core retail, core retail, all here. Now you can trade these events, but remember everything is in a very short-term perspective because of the inaugurations, and it's really best for you to avoid dollar trade. So I'm looking to, first of all, I'm looking to see what happened later on in the Chinese data, and then I will decide which pair to pick. But basically, you can sell or buy British pound either way with a surprise result, because British pound has somehow become a neutral currency ever since Prime Minister May's speech. Right now, you have equal positive and negative sentiment into British pound. It really depends on which currency you pair up with British pound. So you can trade in both ways, but just remember to tighten your stop maybe sooner than you usually do, and watch out for any surprise events or comments. If again, I'm going to buy with positive result and sell with negative result. I don't know which pair I'm gonna pick. Most likely, if the Chinese data later on is positive, then I will pick Australian or New Zealand dollar to pair up to sell British pound. If the Chinese data again is positive, I'm going to pair pound yen with positive data from British pound later on in London session. However, if the Chinese data is negative, then I really have to re-examine the market to decide whether this event is even tradable or not. Canadian CPI, core CPI retail and retail data are also coming out in New York session. This I'm only looking to short, so I'm only looking to sell at a negative deviation. Or I might not even do it because it really depends on when it's inauguration. I don't even know the time of the inauguration yet. So if you have any data coming out head-to-head at the same time with the inauguration, they definitely ignore the fundamental data, right? In the inauguration of Donald Trump is a much bigger event. But for Canadian data, if it's coming out in one piece, then you can sell at the negative number. And of course, I again will try to avoid US dollar. So I'm probably again sell against Australian dollar or New Zealand dollar. And that will depend on what happened to the Chinese data later. So that's pretty much the outlook right now. Remember, tomorrow it's inauguration. You can trade through it if you want to, but definitely we don't know what's gonna happen, right? You can trade through it depending on his speech. We don't even know how long is his speech. But nevertheless, most likely do not hold a trade over the weekend for any trade, because what might happen is gaps, and that's really, like, the market is ultra sensitive basically after tomorrow. You either have a very optimistic mood or very pessimistic mood, and that mood might switch over the weekend. So for currency trader, we are so used to trading without gaps because the benefit of 24-hour market. So really, gaps is real worst enemy, as at least for me. So really, to try to avoid that, I don't like to hold any position over the weekend if we have such a big events like this. So on that, in different exception, of course, if tomorrow you get into a trade and it rally up, 100, 200 pips in your profit, then yeah, you can say to break even and hold over the weekend. Because even if you have a gap, 50 pips, 80 pips gap is significant enough. So if you have 100 pips buffer, then it's fine to hold over the weekend. Otherwise, it's best to close out your trade prior to the market close. That's just me, my own strategy. I'm very conservative in this perspective. Okay, so let's take a look at our daily chart. So first thing first, my Canadian dollar trade has been working out very well. It's still going up. It does look like we are still having this higher high since yesterday, but it gets narrower and narrower, and we couldn't break between 133.50. So I do expect this is like look at it. It's like a box going up here, right? If you draw a line here, you have a high at 133.50. You have a low above 133. So you have 50 pips of box ranging area right now. It can go either way. Really depend on the following two events. First of all, Janet Yellen is gonna speak at 8 p.m. Eastern Standard Time, and you have the Chinese data coming out at I think 8:30. I'm not sure. Let me check the calendar. Just give me 1 second. So it's coming out at 9 o'clock. So Yellen speaks at 8, Chinese data coming out at 9 Eastern Standard Time. So, that can either help the US dollar or it can stop out my trade, which I'm fine with it because I'm already moved to break even plus 100 pips or so. So that's just the way it is. I'm holding it for bigger profit, but I will let the market basically exit me. So that's the dollar CAD trade. In terms of my daily trade, okay, here's what happened. I got into the dollar yen trade yesterday, but you can see this is not really a strong candlestick today. It is more like a bearish kangaroo tail. Now, you don't want to look at things in single dimension. So let's take a look at our other yen pair, and you'll see what I mean. Let's take a look at Aussie yen. Now, Aussie yen, on the other hand, has a strong bullish candlestick today. And of course, I'm kind of regret I didn't take Aussie yen. But it is what it is. I already choose dollar yen, and the reason is because the catalyst from Janet Yellen. So I was hoping that dollar will take off today, which might diminish Australian dollar. Of course, that did not happen, so we actually have a stronger Aussie yen. Now, looking back, if we have the similar circumstances in the future, what you can do is to divide your risk capital and take 2 trades. So I don't want to take more than 1% in any single currency. So what you can do, of course, is divide it 0.5 to each yen pair. So overall, you have 1% in Japanese yen, but you do have 2 different pair to play with. So that might be a good thing to do. That's what I did with New Zealand dollar, basically. But let's go back to our topic. If you look at Aussie yen, it's a strong bullish candlestick. If you look at New Zealand, it's another strong candlestick. If you look at CAD yen, okay, CAD is very weak today. It's even an indecisive movement. So what does that mean is that Japanese yen is very weak today. However, dollar yen is failed to push higher. So let's just show you, regardless of the strong fundamental of US dollar, regardless of the strong sentiment from Janet Yellen, US dollar, for whatever reason, is not being bought. People and traders are hesitant to buy US dollar. And the only possible reason is because tomorrow's inauguration, fundamentally speaking. So that's why you have to be careful. And that's why I decide to tighten my stop loss way closer to where we are right now. And you look at I didn't get out right away is because you gotta look at now. First of all, you have the big picture already, right? So let's go to a smaller picture. So I did not get out right away because if you look at hourly candle for today, what happened is, ever since yesterday's Asian session, we have very little movement until 7 o'clock ECB meeting. You see dollar surge all the way until London close, which is high at 115.50, but we are failed to close above that, and then you have a slowly retracement in later in the afternoon of New York session. So this retracement could very well be profit taking, right? Because you still have a very nice higher high. You have a higher high here. So what happened right now? Again, two following events. Janet Yellen is going to speak again. Chinese data. All this can help us, but it can also completely reverse dollar yen and put us in a very bad position. And that's why I basically tighten my stop loss fairly quickly. Generally, I don't do that in my daily trade, but circumstances by circumstances, right? Different case by case. So I tighten my stop loss right here at 114.30, which is really fairly a nice support area for hourly chart. So if I get stop out later, that's fine. I'm probably going to lose about 0.2%. If I don't get stop out, then I can ride it further. But nevertheless, I am going to keep tighten up this stop loss, even if I don't get stop out, just because I want to avoid any unexpected events from tomorrow. Tomorrow, US dollar is really going to be volatile, most likely. So that's my daily trade for dollar yen. My New Zealand trade, New Zealand Swiss, as you can see, we have another solid green candle. Now, if this is a normal circumstances, I will be very happy to keep holding it. I will be very happy to maybe even buy more. I know we have this high resistance here, but I will be more happy to buy. However, because of tomorrow's events, I actually not looking to get into any daily trade. So what I do is I move to break even at right now 70.70, which is also the low from the 3 candle. But again, if you go into an hourly candle, what happened to New Zealand Swiss, from yesterday's Asian session, we have a little bit downside movement, consolidation, and we break above, and then we just keep going up. So again, we does still going this higher hype direction, but the Chinese data later on might completely reverse the position if it's a risk of sentiment. So depend on what happened, but I put my stop loss in hourly chart, if you can see right at here. So that's pretty good level to put. That's really 2 swing low already. So that's what I do for New Zealand Swiss. What about Euro New Zealand? Now Euro New Zealand again continue edge lower today, and really nothing much to say. Euro dollar is fundamentally weak, sentimentally neutral. So again, what I do is just set to break even. And if you look at Euro New Zealand, it's exactly same picture. My stop loss is at break even at 49.62, which is actually quite high. So I probably later on to see if we get to this area, I'm probably just looking to get out. But nevertheless, that's my strategy, how I manage it for now. Now, why I keep emphasizing is my strategy. It's because some people don't like to hold the trade, right? Some people like to take their profit, and there's nothing wrong with it. It really depends on how you play with your own risk management. So if you see a trade working out, you feel like, hey, we have one-to-one, I like to take my profit. Can I do that? Yeah, absolutely. It's your personal choice. Of course you can do that. So we got in this candle. If you feel like, okay, I'd like to take at here right now, that's perfectly normal. You just switch same thing. We got in this green candle. If you say, hey, it does look like we have 1 to maybe 0.8. I just want to wrap up. That's fine too. It's up to you. Same as dollar yen. If you feel like, oh, I'm too scared, I just want to get out, that's fine too. It's all up to you. Same as dollar CAD. If you feel like, oh, I'm making enough money, I want to get out, that's fine too, right? It's really up to your own personal choice. Okay, so let's take a look at our 28 pairs. Okay, all right. So Euro Pound today, again, very indecisive movement. Euro Swiss. Really, I mean, if you look at hindsight, you'll say, hey, that's a green candle. But look at what happened. You were just basically in this range area. So nothing really happened, ever since the beginning of this year for Euro Swiss. Euro dollar, on the other hand, it does have better, let me close this. It does have better movement of candle. Now, for Euro dollar, of course, the upside is right here, and I'm sure you can tell it's really, this is a significant area at 107.50 all the way up high to 108 or 09. So 107.50 is really a good area to sell, providing if we do not have any risk events ahead of us, or if we enter at a nice catalyst. But that's what happened to Euro dollar in the micro pictures. Now, of course, some people might argue, say 108 is even better. Of course, 108 or 108.50, somewhere around this area, this range, this is perfect area to sell Euro dollar, because you have this resistance, you have support here, breakthrough, you have this resistance. So generally speaking, this 08.50 to 07.50 will be a nice zone to start selling, right? And I know it's 100 pips, but for daily chart, it's really nothing, right? It's really how I manage with this trade. 100 pips in this kind of volatile market, it's so easy to break through. So I'm looking to maybe sell if we have a daily signal in between this zone. It will be a very nice area to get into it. But of course, we have to see what happened to tomorrow's events and the following week's events. Euro Aussie, again, continue to edge lower in front of the strength of Australian dollar. Euro CAD keep going higher. Euro New Zealand, same thing, and Euro Yen. So basically, just by looking at this, the weak currency is really Canadian dollar, Japanese yen, and the stronger currency is really Australian dollar and New Zealand dollar. So basically, the technical chart has confirmed our fundamental picture right now. Pound Swiss franc is really not much movement for cable or British pound today, and that's why I say it's really in a neutral stance forward. You see, Pound Aussie doesn't even move anywhere, regardless of the strength of Australian dollar. So that's what I'm saying, that British pound is in a quite neutral stance right now. It can go either way. Some people like to buy, some people like to sell it. You do have equal seller and buyer in British pound right now. Pound yen keep edging higher, and this is really a bummer because we were in this trade yesterday. It actually went up 200 pips from our entry. So that's just something to learn for myself, to really have a little bit patient for my trade, and be fine with the outcome as long as you have enough conviction. So that's, again, a lesson to learn for me personally. Swiss franc, Japanese yen, really not much movement since this green candle. So really small, indecisive candle. Dollar Swiss, exactly same picture if you look at it. Dollar Swiss, dollar yen. It just show you the risk sentiment is really on and slowly picking up, because some people are really afraid of tomorrow's inauguration will cause a huge volatility. Also, today's Chinese data might cause volatility also. So that's why you see dollar versus safe haven currency did not go anywhere. Dollar CAD, on the other hand, is the only currency that's going up. Aussie Swiss, another, again, like I say, if it's normal situation, I will very much love to buy Australian dollar, but we just have so much risk events that could jeopardize the picture of fundamental. Aussie dollar, It's another strength in Australian dollar. So it's looking very, very nice. Now this is again the only currency pair I will trade into the in aggregation if I decide to sell US dollar. So Aussie dollar is still the go-to pair. Aussie CAD, huge green candle for these 2 days. On the other hand, Aussie CAD is actually a much better pair to choose, right? So it's really the thing about Australian dollar is it's in a completely opposite direction of US dollar. So that's why your hands are tight. If you are bullish in US dollar, then most likely you will not want to buy Australian dollar because people can either choose buying US or buying Australia. And I'm talking about now, and the reason is because they both are strong currencies that people will buy for a better future, right? For a better yield, a better interest rate. So that's why they are basically head. So if you buy if US dollar gain a lot of strength, Australian dollar will lose strength and vice versa. So that's what happened. Sometimes you have to either choose one or another, or you can buy both to sort of hedge out. So you're looking at that Aussie CAD actually went even higher than dollar CAD. So if you look at hourly chart for Aussie CAD, for yesterday's risk events of Bank of Canada is this candle at press conference. That's a green candle. It actually went 99.50 to okay, it's actually fine. It's about 100 pips as well. So maybe it went higher from the low of the. So okay, so it's about same range of US as dollar CAD. Okay, let's keep going. Aussie, New Zealand. Let's see who wins the battle. Again, very indecisive movement. So they both are very strong. Aussie Yen, another edge higher as mentioned. Now, of course, the resistance is coming at this area, as many of you know, and you can tell already. So that's something to watch out for now. But fundamentally speaking, really depend on what happened. Don't be shy away just because there is a technical resistance. The resistance just shows you that, hey, that's a critical area, but it might very easy to break through. So depend on what's driving the market. Aussie Yen, and let's take a look at CAD Swiss. Another down day for Canadian dollar and another down day. Oh, CAD Yen is actually not going anywhere because the weakness of Japanese yen. The New Zealand Swiss, New Zealand dollar, and New Zealand CAD. Now New Zealand yen, and that's pretty much everything is in line right now. So it does look pretty good to take trades, but watch out because of the risk event tomorrow. And again, not all risk events are equal, but because the major risk events that we try not to place our trade so close to it, right? Generally, if you want to trade into it, it's best to do 48 hours prior to the risk event. In that way, you have enough room to move to break even. It's just like my New Zealand Swiss trade. I got it in this candle so that I have all this candle for me to move to break even. Same as my Euro New Zealand trade, and also same thing as my Pound New Zealand trade. Now, Pound New Zealand trade, I didn't make any money, break even. But just imagine if I got in, say, at this candle, then I will actually lose the trade. But because I got in at this candle, which is 1, 2, 3, 4 days before the risk events, that's why I guess I got to basically got out of a surprise situation intact. And that's what you want to do if you want to trade ahead of a major risk event. So I will not get into any daily trade today. I will try to manage my current trade and basically trade British pound risk events in London station and Canadian dollar risk events only if the market is stable. If it's very volatile, then really better to stay out. And in aggregation, I'm very tempting to trade, so I will trade through with a live broadcasting, but it's really depend on if we have a clear direction of euro dollar from Donald Trump's speech. and it's really best to close everything out. Actually, you know what? Let me check. I don't even know when is the inauguration. Let me, because I don't have it in a forex taster. Let me see. U.S. inauguration. Okay, time. It says Friday, January 20. Yeah, but okay, there's a full schedule. All right, we do have a time here. So the inauguration. Okay, like I'm gonna change my screen here. Okay, so 6 a.m. This is Eastern Standard Time, I assume. Yep, Eastern Standard Time. So, because it's in Washington. So, I got into here. Let's see, where's the speech? Inauguration address. 11 a.m. All right. So, it will start at 11 a.m. Eastern Standard Time, which will be, let's see if we have anything that's at the same time. 11 a.m. will, okay, that's fine. It's after all the REITs events. But because of that, that's what I mentioned. Try not to take dollar trade, because the 11 a.m. events would definitely affect traders to trade into US dollar, right? You just don't expect to see too much. I don't know, but generally speaking, you wouldn't see too much reaction for US dollar prior to a major risk event. On the other hand, people might actually buy in large, trying to profit. You just don't know what is the reaction in this kind of events, because it's not like fundamental data where it's very straightforward. So in this sense, you will have equal buyer and seller, and its market will be very irrational. So you don't want to get caught up in this kind of irrational moment. It's really best for you to trade after the risk events or during the risk events if you know for certainty what he's going to do. Things to look out for, of course, if he still mentioned about protectionism against China, Mexico, Canada, Russian, or Europe, that's all very negative sign for you to sell US dollar. Which pair to pick? Again, you can pick Australian dollar. If he, however, mentions something more positive about infrastructure, economics, future jobs, united harmony, working together, things like that, global leader, then of course that's a positive statement for US, that you can buy US dollar and sell Japanese yen. The third scenario is he might not say anything in particular. He might just say something completely out of blue. That could happen too. Then you don't trade. So that's basically how you trade through this kind of risk events. Again, only if you want to do it. If you don't want to do it, you can still look at how market react to it and have fun and see if you can understand a certain pattern. Otherwise, have fun. Tomorrow I'll be back with another Friday daily analysis, or maybe I'll do it after Friday on during the weekend. But nevertheless, play safe. Even if you are a technical trader, be careful tomorrow during this time of risk events. Okay, I hope this video is helpful. If you have any question, feel free to let me know. Otherwise, I'll be back tomorrow with another daily analysis. Thanks for watching. Thank you. Bye.